SoFi stock has just seen two massive players selling a lot of shares. Is this a net positive for the stock, or is it going to absolutely tank it? In this video, we're going to be trying to find out exactly this. We're going to look at their intrinsic valuation to see whether or not this stock is still a good buy, despite the analysts putting this at a general consensus of a hold. Basically here we have seen Kelly Kilo, if that's how you say it, and Jeremy Rochelle sell shares. These two people are both high in the team of SoFi. Kelly here is the EVP Group and Business Unit Leader for Spend, Invest, Protect and Save, and Jeremy is the Chief Technology Officer. With Kelly here selling 11,000 shares, leaving her with 226,000. This is at the price of $12.72, and Jeremy is selling 68,000 shares, with the remaining shares being at 655,000. I would actually say this is a positive for SoFi. I know it seems a bit weird, but we can see here that he has only sold what would have been less than 10% of his actual allocated shares, which actually indicates that they do have more hope for SoFi going forward, as do I think the majority of people, as selling these shares at this price, yes, is taking profit now and is obviously something in which these people will want to do, as it will intrinsically help them and their families at this time, just taking that money out of the company, but they are also leaving themselves with a lot of shares in this company, basically hedging their bets that this stock is going to continue to rise over the next 10 years. Since this was announced, SoFi stock did actually see a bit of selling pressure, but nothing major, and it has now been bought back anyway. So there is not really anything to worry about with this. I think this is still a net positive for SoFi stock. But will this be enough to help be a bit of a catalyst to bring SoFi stock back up? I do hope so, but I do doubt it, especially with the state of the American economy now anyway. I'm going to put my cap on because I need a haircut and it doesn't look very good right now. But we are still below the 50, 20 and 100-day exponential moving averages, but we are now actually above the 200-day moving average, which could actually help push this stock up in the next couple of weeks. And of course, SoFi has recently finalized its largest loan platform business agreement to date, up to $5 billion US, whilst Jim Cramer has been talking up the stock lately. Of course, if Jim Cramer is talking up the stock, that could be a bad thing, as anything he says, the opposite tends to happen. But Cathie Wood has sold millions worth of the share, which obviously isn't a good look for the company, but you didn't need me to say that. Morgan Stanley recently raised its price target for the stock to be from $7.50 all the way up to $13, which is really good. But overall, the general consensus from Wall Street is that SoFi is still a hold when you look at it on a broad scale. In my mind, I still put this at a solid buy, but I'm not a financial advisor. And on an intrinsic value basis, I do have this stock to be massively undervalued at its current price. I have the bullish price to be set at $117 for this year, which you might think is crazy, but this same system puts Palantir at $11, so it's actually quite a bearish system. And when we do actually look at the bearish one, we get an intrinsic value set at $89 with a margin of safety of 25%. It gives you an acceptable buy price on the left here of 133 and on the right of 67. Going in between the two of these, we have an intrinsic value set at 133, which is the acceptable buy price for the bullish target there. Again, this is just Graham's formula. It's not exactly... It is a very good metric. I won't lie. But you need to base this off of many other things. And when we look at Peter Lynch's valuation here, we get a result of 8.3, which is crazy. Of course, the PE ratio is at 29 now. Since my last video, SoFi has continued to go down, and on a discounted free cash flow analysis, because their free cash flow is not particularly great still, we cannot actually execute that. If we do look at their free cash flow on a quarterly basis here, we can see that it is very volatile and it isn't actually looking to be going up at any point. But of course, SoFi are still developing. They are a relatively new company, with them being founded in 2021 here. It is fair to say that they still have a lot of room to grow, and them being the new kid on the block in the world of fintech, I think it's fair to say this company has a lot of room to run. Of course, SoFi stock has seen approximately a 40% sell-off since its peak here, and well, it's actually now down to only 30, but at its peak, it was all the way down to 40%, and I still don't think it's justified. I have this stock to be massively undervalued. Yes, they are a new company and do lack the free cash flow, which might give investors a bit of a reason to not invest in this company, but I think long-term, in the next 5 to 10 years, this stock is going to absolutely explode. I know there's a lot of hype around this stock, and it is easy to think that it is all a bit spammy and stuff, and I definitely was someone that thought that to begin with, but I do genuinely think SoFi is a great company and it has a really strong outlook. As I said earlier on, the general consensus from the analysts is a hold for SoFi, with 4 putting this at a strong buy, 1 at a buy, 9 at a hold, 2 at a sell, and 3 at a strong sell. I can't agree with the bottom 2 sections there. I don't think SoFi is a sell at all. Would I put it at a strong sell or buy? I probably actually wouldn't, despite what I have actually said. If you're holding it long term, I would definitely say it is a brilliant stock to be buying, and if you can dollar cost average into a position in SoFi, I think you're going to do fine. But I kind of do expect SoFi to continue to fall slightly, even though I don't actually think it's justified. I do think it will continue to fall, especially when there's a lot of changes happening to interest rates in America at the moment. SoFi is permanently being affected left, right, and center. But it will be interesting to see what their Q1 result comes out with in April. I think they're actually releasing it in around May time from memory. Yeah, it is the 5th of May, sorry. So it will be interesting to see what their Q1 results yield. Typically, they have beaten estimates quite renownedly, basically. That doesn't make any sense, but they've beaten their surprise rate quite consistently. That's the word I was looking for. So it is something in which I do expect them to do again, but now I think analysts are actually catching up with the fact that SoFi is a great company and they are pulling in a estimated 75% increase year over year, and that's kind of what drives my high expectations for them on Graham's formula. And especially when this could potentially even be underplaying it, I think it's fair to say that I think this is a great company to be holding, especially if you can dollar cost average into a position. So I'm going to end that video there. I hope it has been useful. Again, it's quite interesting to see that the management team in SoFi is starting to sell positions, but not a lot of positions at all. So it is very interesting to see, and I think it is actually a net positive for SoFi. With that being said, I hope you have enjoyed this video. Again, I'm not a financial advisor. None of this is financial advice, and I'll see you for the next video.